But let's hop across straight to Anuj, and he is in conversation with Sunil Singhania currently. Anuj, over to you.
Well, thanks, Sonia. Yes, indeed, we are at the Reliance Capital headquarters, and of course from Reliance Mutual Fund stable, we have Sunil Singhania, the Chief Investment Officer at Reliance Mutual Fund. Sunil, good afternoon. And as luck would have it, it's raining right now, and the market choosing to respond to that, then Brexit. Your first thoughts on how the market has been so resilient? Whether it was bad news across the board, which was thrown at market over the last 10 days or 15 days.
Welcome, Anuj, to our office. Welcome, CNBC. I think, yes, what you said is perfectly, bang on dot. No one expected the kind of movement which we have seen today. But I think markets, the fun on the markets is being, always being surprised. So I think we are here. I think the good thing about this event is that it happened on Friday, and we got like Saturday and Sunday for people to do their analysis, for umpteenth, research reports come in. And I think when people started to go into the fine print, obviously we're still not completely out of the event, but at least from an India perspective, from an emerging market perspective, the fears turned out to be much less than what was earlier expected. Okay. And I think the good thing is that the currencies globally have been pretty stable. And I think that has also added to a lot more stability and confidence.
Sunil, one feedback that we are getting is that don't look at just 1 or 2 day movement and the 1 or 2 day resilience, because the Lehman crisis just hit us and it was over in terms of market reaction in a week or so. But this could be much more prolonged and much more protracted, and the market may have to deal with uncertainty from the Eurozone for a bit longer. Your call on that?
So you are absolutely right that we are not out of the woods as yet. And it is too dynamic a situation. But having said that, last I think 5 years, frankly, I have learned more than what I have learned in the previous 20 years. We had the QE tapering, we had the fiscal cliff, we had Brexit, and so on and so forth. So I think the one thing is that we have to take all of this in stride. The problem obviously will be reinforced, or it will get amplified if more countries join in. At this point of time, the remaining 27 countries have pledged that they would be staying with the EU. But I agree with you, it's a situation worth watching.
Okay, so let's talk about how to play this market from portfolio point of view. It's been a bottom-up stock pickers market, but broadly, what are the sector calls that you're taking? I believe you right now have your finance and banking exposure is at the 52-week high, and that sector has done well, especially NBFCs. Do you think you can still make a lot of money in this space?
So one thing is, clearly with the world where it is, I think it would make more and more sense to shift focus towards the domestic economy. And luckily, as you said, it's been raining here. It's been raining all over the country. So hopefully the domestic economy, both on the consumption as well as capex side, should do well. As far as financials are concerned, we shifted a little bit of tilt towards niche financials. So, select NBFCs, wealth management, insurance, AMCs. I think that is one focus area. We believe that India is a land of savings, and increasingly savings are moving away from hard savings or real estate and gold towards financial savings, and which is where the insurance companies and the asset managers do better. So I think there is a little bit of tilt there, and that is the reason you are seeing more exposure towards the financial services. We continue to be confident there.
Okay, Sunil, just hold that thought. We have some breaking news right now, and I'll toss it to Sonia. Sonia, I believe that NSE story is something that we have fresh updates on.
Yes, okay. Anuj, actually we were to get IFCI in a bit, but we haven't really connected to that line. So in the meantime, while we do that, IFCI is a big stock in focus, by the way, as NSE will be filing for an IPO in Jan 2017, and as we know, IFCI has about 3.5% stake in NSE, and that stock has been spiking up quite a bit. So while we connect back to Malay Mukherjee, Anuj, just tossing it back to you, go ahead with your conversation, and I'll interrupt you as and when we get the management of IFCI.
Oh, okay, I'll do that, Sonia, but if you have any query for Sunil, please feel free and ask that. Sunil, the other thing that we were discussing is that this is a market in which, and we were talking to Prashant Jain earlier in the day, and he was making a point that yes, the bottom-up stock picking has worked out, but now if you look at stocks, large cap, mid cap, stock to stock comparison, it's no longer the case that mid-caps are any cheap. Actually, mid-caps might be more expensive than large caps without the cushion of safety of the large caps. Do you think the time has come to look at some of the top-down approach as well for our market now?
See, one good thing about India is that, India is a large country. You have many companies listed. And there are opportunities both in the large and the mid-cap space. Having said that, you can't look mid-cap as a basket. So if you look mid-cap index, it will look expensive compared to the large cap index. But within some sectors, you still have an opportunity of either lower valuation or maybe same valuation but with faster growth. So I mentioned about niche financials, You couldn't buy a niche financial company in the large cap space. You have to buy a mid-cap space. Suppose if you have to buy an exchange, you mentioned about NSE listing, you'll have to buy something on the mid-cap space. You don't have a large cap listed so far. So I think there are still a lot of niche opportunities which are available on the mid and the small cap space.
Okay, Sonia?
Yes, Anuj, I'm just going to take a break from your conversation for a bit.
Yeah, one of the big stocks of the day, up about 6.5%. But let's continue with our conversation that we are having with Sunil Singhania. So, Sunil, the other space, of course, we touched upon it in part. The other space that's done remarkably well over the last fortnight, last month, is PSU banks. Is it just valuation playing out here, or are you sensing something more here in terms of a much bigger move?
So I think the good thing is that both the RBI governor as well as the finance ministry has taken the problem head on as far as the NPs are concerned. We have the Banking Bureau Board, which is becoming very aggressive. We have at least some, you can say, steps forward towards resolving the NPA issues. Obviously, the economy hopefully reviving a little bit will also help. But I think things are getting in place for a few public sector banks. Having said that, I think there are some smaller PSU banks which will continuously need capital, which are under more stress. There is an uncertainty towards their merger. So I think even within the PSU banks, one has to be more, you can say, bank specific rather than classify them as one basket,
So the large ones, like the likes of SBI, PNB, Bank of Baroda.
So I think our house view has been that structurally, public sector banks are losing their competitiveness, but in the near term, a few large public sector banks, because of valuation play, might be a sort of a tactical play.
Okay, so stay on with us. We'll do one thing. We'll take a short break and be back with more questions. But the mid-cap index right now is trading at high point of the day. In fact, that's up about over 1% and a lot of individual stocks surging. We'll track a lot more stocks and continue our conversation with Sunil Singhania after the break. Welcome back. Things looking good for the mid-cap stocks. Dhampur Sugar is now trading at high point of the day. Bajaj Hindustan, so sugar stocks doing well. Gen Irrigation, Mercatus, as Sonia spoke about. ARSS Infra as well, trading at high point of the day. In fact, almost circuit up. We're still in conversation with Sunil Singhania from the head office of Reliance Mutual Fund. In fact, the entire Reliance ADAG stable. Sunil, the other thing that stands out, I'm looking at some of your portfolios, is your large holdings of chemical stocks, agrochemical stocks, 8.3% sector allocation, large part of which I believe could be UPL, but as a space, are there enough opportunities here or only a couple of stocks or 2 or 3 stocks here?
So I think 4-5 years back, we basically were obviously doing a lot of research on the chemical space generally and agrochemical obviously. And we realized that there were characteristics similar to that of pharmaceutical, low cost manufacturing, highly skilled manufacturing, the world as a market. And that is when, across the spectrum, we have some decent exposure. So in our flagship fund growth, we have an agrochemical exposure, but in our mid-cap funds also, we have a good mix of good quality, long-standing chemical companies. And I think that's worked out well. We still believe that India stands out in terms of the global opportunity, and the stocks are not that expensive if you see the growth potential. And hopefully, the monsoon the way they are.
UPL has rallied a lot actually.
So without, getting into names, I think the growth is still not reflected in the price. The companies are still trading at, like the lower teen multiples. And given that the world is their market now, I think there is we believe, a structural, case of growth of 15 to 18% for these companies over a medium time frame.
Okay, Sonia?
Thanks, Anuj. Hi, Sunil. Afternoon. First of all, you have a great-looking office. I mean, I can see that background, and we hope to do a lot more interviews from your headquarters itself. I wanted to ask you about your view on the IT stocks, because I noticed in many of your funds you have exposure to Infosys, HCL Tech, etc. And because of the way the pound is depreciated, there's a bit of a worry on what the impact would be on the dollar revenue growth. Do you think that this is a great opportunity to buy into IT names, or would you be concerned for a while?
Thanks for your compliment for the background. I thought you would also compliment the foreground. But having said that, I think, see, IT, obviously the growth rates have slowed down, compared to what they were 4-5 years back. And we have to accept the fact, automation is playing a big role. The world itself is not a great place for growth, and therefore the growth rate of IT companies is also slowed down. There have been cross-currency impact for quite a bit, quite a large number of IT stocks. You have exposure to British pound, euro, and the cross-currency has not helped. But having said that, some of these companies are large in size, they are competitive globally, and also the fact that they are not now valued at some obscene PE multiples. So given their cash flow, given their predictability of decent profit growth, we believe that it makes sense to be at least equal weight as far as the IT sector is concerned. And that is where most of our funds are being positioned. So we are not quite gung-ho, but we are not bearish also. So we will be more or less equal weight as far as this sector goes.
Okay, so more or less equal weight in the IT sector, but not too bearish either. I also wanted to ask you about your love affair with some of the MNC companies. I know you bought a lot of MNCs during the time of the UFS, names like Honeywell, Cummins, etc. I don't know what you hold yet, but some of these stocks like Cummins have destructed a lot of wealth over the past 12 months. What's the sense you're getting?
We are obviously optimistic on the Indian economy, and we do believe that it's a matter of time before the capex cycle in India picks up. Having said that, we wanted to be in companies which have good technology, which are leaders in their respective segment, and at the same time they have balance sheet which will enable them to grow. So we are right now playing the operating leverage and the technology skill set rather than playing the financial leverage, and that is the reason why we have invested in all the names that you mentioned, because these are unique companies. And 1 or 2 months of underperformance or overperformance does not matter. I think ultimately when the growth comes back, some of these companies can double almost in 3-4 years, and the profit growth can be significantly higher than that, and which is something which we have seen between 2002 to 8, where companies again like Siemens and all, the profits went up by like 20 times in a matter of 5-6 years. So I think we are right now playing for technology, good management and clean balance sheet.
Okay, Sunil, before we let you go, just a couple of final thoughts. This market is absorbing bad news rather quickly and rather well. Do you see signs of a big bull market where the index makes a new high and a significantly higher high? Not in the near term, but over say next 1 or 2 years?
So Anuj, if you rightly said, the signs are ominous. So if you see the March quarter numbers, slight outperformance, and you have stocks like Larsen move up 14%, and you have stocks like ITC move up 10%, and Tech Mahindra move up 10%. So it is very clear that the bad news is not having that much of an impact, but the good news just flares up the market. So hopefully we all will be looking at maybe more things to cheer once things start to stabilize on the global front.
Okay, and final question, do you see the domestic fund flows continuing, Sunil? Because that's really been a big support point for our market. Your conversation with the retail fund...
the retail investors have been very matured. In fact, if you would have had the kind of event like Brexit, I was out of town visiting companies on Friday, and in normal circumstances I would have been flooded with calls. But investors are more mature. They know that these kind of events keep on happening. The good thing is that thanks to media and thanks to general awareness, people are more or less aware that these kind of things can happen. And I think that is also helping their cause. But right now we are not seeing any signs of concern. In fact, there were more calls of whether we should put money lump sum or should we spread it over 4-5 days when the event happened on Friday. So we are quite confident of the flows sustaining.
Sunil, appreciate your time. Thanks a lot for joining us.
Thanks a lot for having me, and thanks for visiting our office.
And we'll let you get back to your office. Thank you so much, Sunil.